All right. What's up, guys? So, today we're going to be talking about a bit more of a complex topic. And I want to front run this and kind of just say that none of this is really backed up by anything. It's mostly just kind of my belief and how I perceive things when I'm trading markets. What I want to discuss is this idea of an emotional attribution paradox. So that's what I'm going to call it. I don't know if those are actually what I should deem it to be. But basically, the market likes to, or really, market participants like to categorize things to make sense of it, right? To digest information, to further understand that information so that we can justify why are we doing X, Y, and Z. So collectively, when we look at this price action, we're all going to say that's FUD, right? That's fear, uncertainty, doubt, it's capitulation, it's pain, it's hell, it's whatever, right? Um, that's not fair. It's not fair for us to say that. It's a bit of a paradox because the same people, right? Let's put it this way. If we're trading at 21K, that means that somebody sold 30K, right? If we're trading at 30K, somebody sold 40K, somebody sold 50K, someone sold 60K. Do you think that the same people that sold 60K right here, which is your boy, by the way, are experiencing the same sort of emotions as the people who sold at, let's say, 21K? No, absolutely not. Right. Those people are potentially euphoric, right? They just watched as their buying power tripled. So they don't give a shit. Um, and they're not experiencing this capitulation, that fear, that uncertainty, that doubt, that pain, that chaos, right? They're chilling. They're on a yacht somewhere, which is not your boy, right? And they're running away from the feds because they over leveraged, right? But regardless, that's sort of this paradox, right? So it's a paradox of emotional attribution. We cannot, what's the word I'm looking for? We cannot control. Wow, I can't believe it took me that long. We can't control the emotions of the market, right? Of the market as a whole. We have zero control over that. The only thing that we can control is our own emotions. And the market is the greatest reflection of human emotion. If we really want to think about it, the market is a social experiment, is it not? Right? You give people an asset, you say, hey, it does X, Y, and Z, whatever. And then they determine what the price of that asset is. It's a social experiment. It is the greatest social experiment in human history, right? So, in order for us to comprehend that idea, we can't, we can't really make sense of it. So, we categorize things and just lump everything in as one whole sort of picture so that we can view it as such, so that we can action off of it as such, right? But it is unfair. It's a paradox. It's not fair for you to say that this is fear, uncertainty, doubt, pain, chaos, whatever. When I sold at 60K, I've mostly been chilling in spot for the entirety of this run downwards. And the only times when I wasn't big chilling in spot were the only times when you see price action actually bouncing significantly, right? When we zoom out to that weekly chart and we look and say, hey, what is significant, right? There's that time, and then there's a little bit over here. There's somewhere over here too, but I wasn't in that. Um, right. So I'm not experiencing the same emotions that you might be. So it's unfair to categorize it as such. The only thing that we can do as a market participant is uh, limit the amount of emotions or which emotions we're experiencing at any given time. So give me a second. I'm going to come right back and then we're going to talk about it. All right. So if the market is this collective of participants' sentiment, right, and their emotions, and it's this big social experiment, then we should be able to kind of navigate that market by understanding our own emotions, right? So the way that I like to think about it, and this is probably true for everyone in just all aspects of life, is this is how we perceive things on a day to day basis in terms of emotions, right? It's relatively flat. We don't, we're not really extremely emotional, euphoric, and we're not really extremely depressed on a day to day basis, consistently just like wave after wave after wave after wave, right? It's relatively flat. Only when we zoom in further to this relatively flat wave can we really start to perceive the actual skews in our emotions. This might be when you wake up in the morning before you've had your coffee. This might be after your coffee has set in and you're really feeling that caffeine, right? This might be the crash that you experience as a result of that caffeine wearing off. And this is the end of your workday. This is right after you get off work. This is as you're chilling and resting and playing video games, whatever, and eating whatever junk food and about to go to sleep. That's kind of how I view things, right? So that's on a relatively, day-to-day basis. We want this fairly flat kind of skew in terms of emotions. On a much higher time frame scale, this is life, right? This is, your start of your lifespan to the end of your lifespan. This might be when you graduate high school. This might be when your girlfriend breaks up with you. This might be when you get a promotion at a job. This might be, a death in the family. So that's life, right? And during all of these years, we're kind of experiencing a very similar wave, but on a higher time frame. But hopefully, those waves uh, are much less frequent, right? And that's something to say about if you're trading extremely low time frames, you're going to experience a much higher frequency in terms of emotion, both skewed towards the upside and to the downside. And then if you're on a much higher time frame, you're probably going to experience those waves less frequently, hopefully. So there's this kind of fallacy that high time frame trading is quote unquote easier. I think that is, in fact, a fallacy. I don't believe that to be true. I just think that the waves of emotional bias are less frequent. So you have less sample size to fuck yourself over on. And it's kind of how I view it. Right. So everything that we do in terms of a general aspect of life is kind of based around these peaks and troughs, right? In terms of emotional bias and how we perceive things. And this isn't just true for our own emotions, it's repetitive in nature. So I'm going to give a couple examples. All right, so these are my examples that I've kind of cherry picked to get across my idea to you so that you can think that I'm a fucking genius. This is your heartbeat, right? These are audio waves. This is the circadian rhythm of flowers in terms of, when they're blooming during, the day and then when they're closing up their petals during the night. This is your sleep cycle, your depth of in terms of how deep sleep are you or what stage of your sleep are you in every single night, right? We see this pattern frequently in nature. It's kind of just a thing, right? There's no negating it, it's just there. So it makes sense that our brain would kind of follow similar patterns, right? If you think about something like the peaks and troughs that you experience when you take a drug or when you eat dark chocolate or when you kiss someone that you love, right? In terms of dopamine and serotonin and endorphins. So this pattern is repetitive and it makes sense that we would see it as well. So if the market is a direct reflection of the culmination of market participants' emotions, it makes sense that the market would directly reflect this same sort of pattern, right? In sort of ranging environments, this is where we see this very applicable. Each and every single market participant is experiencing a variation of our set of emotions within those waves at each and every single one of these price points. But this concept, it's exaggerated exponentially when we're just simply trading in a very similar shape to what our emotional bias, our emotional kind of wave naturally gravitates to, right? Hopefully that makes sense. So, if we need to portray this idea of understanding emotions so that we can navigate emotions, it's very complex. I have a decent understanding of what I'm trying to say, and yet it's extremely difficult for me to get that idea across to you. I'm very much struggling right now. I don't know if it's coming off, but um, we need to kind of understand this concept, but truthfully, we can't. So, really quick, I'm going to give another example and we're going to wrap it back up. All right. So, in terms of understanding and attributing emotions to further understand things like market sentiment, this is what we see, right? At face value, we just see numbers, we just see squiggly lines, we see price, we just see the dollar for that price, right? That's all we see. We just see the base layer. It's two dimensional. This is reality. It's very complex. It's way over our comprehension, right? It doesn't really matter how smart you are. I'm willing to bet none of you watching this are geniuses. Maybe you are. Good for you. But 99.99% of us are not geniuses, right? We can't comprehend this. There's absolutely zero chance if this is our level of understanding or the level of understanding that we're striving for, right? So it's too complex. And oftentimes, when you're entertaining each and every single cog and each and every single gear turning, and you're trying to analyze how they're turning, how fast they're turning, which direction they're turning in, it's too much, right? You get overwhelmed and then you fall into what I like to call analysis paralysis. So that means that you just know so much and you're willing and able to entertain each and every single idea out there, which are infinite, right? There's infinite variables. There's infinite ideas and opinions and etc. Right? You understand it to such a high degree, or maybe you think you do, to a point where you're not sure which one to even entertain. Right? So this is what we see. This is the reality. This is what we should strive for, which is exactly why humans categorize things, or at least I like to imagine that they do. They categorize things very broadly, right? And it's kind of just this general understanding, and they generalize everything to just simply say, hey, this is peak fear, this is capitulation, this is pain, etc. Right? It's not true. So we need to get that idea out of our heads, and we need to kind of skew away from that emotional bias attribution, which is totally a paradox and likely not really applicable. Um, so what we should do is try and limit the amplitude of all of these peaks and troughs so that we're experiencing our emotions, not just less frequently, but more so with a less sort of drastic skew in terms of the amplitude. So just kind of skewing, sorry, right? Having a more consistent and more closely resemblant of our desired kind of just flat line, right? Of course, I don't think we should always just kind of aim for this flat line. We want to entertain these emotions. We want to cap them and their degree of which they affect us. But there's this fallacy as well that tends to be, hey, we just need to be robots and not have any sort of emotional take on anything and just have this melancholy and monotone attitude and not be affected by anything, just throw emotions into the trash, and now you're a robot, and robots don't outtrade humans as long as you're a good trader. So, and I definitely perceive that to be true, right? Robots absolutely outperform 99% of us during this sort of price action. But when price action and the whole idea of markets being a social experiment really comes into play, and we get more like a ranging environment, robots get chopped the absolute hell up, right? They don't have an understanding for this very complex sort of way of thinking of emotional attribution. They can't comprehend it. Humans can, right? We can absolutely adjust to this sort of price action. We can absolutely entertain these ideas and have those three cogs turning so that we can interpret the information being provided to us, digest it, and therefore take action off of it, right? Robots cannot. They just wait and hope that this actually is the leading move upwards and that it continues going. And if it doesn't, they get chopped the hell up once more. They get chopped up during that price action as well. They might even get chopped up during the downtrend on the way into our range lows. And then only after we break down below the range lows do they go on to then outperform you once again. This is exactly why your favorite people on CT sell you algorithms instead of using them for themselves. Sorry. But what we should do or we should aim for is to limit the peaks and troughs, limit the amplitude to each and every single one of these peaks and troughs. So, my final point in the conclusion of all of this rambling, which is totally meaningless and very much so just the ramblings of a mad 23-year-old, is your goal here should not be on the right side for whatever the next move is. You should really not give two fucks about that. Your goal here should be to limit the emotional bias for whatever happens next. And now we're going to transition into some actual Bitcoin analysis. I already tweeted about this a couple hours ago, but for anyone who didn't see it, my take on Bitcoin at the moment is that we are pretty much reflecting this idea of market sentiment and general culmination of what people are experiencing in terms of emotions. And we're kind of just going sideways, right? We're kind of trading in this range. We did something extremely similar back here and that lasted for about a month or so. So if this happens again, you absolutely do not want to be the person who is seeing a very high frequency in terms of their emotional bias, as well as a extremely skewed amplitude, both towards the upside and to the downside, right? And that just means you don't want to be the person getting bullish here, bearish here, bullish here, bearish here, bullish here, bearish here, over and over and over again. We want to kind of approach with this idea that the market is going to further portray our emotions. And at the moment, everyone's emotions are pretty high. We're all kind of questioning, hey, is this a macro bottom or is it just another relief bounce that gets faded before we put in yet another lower low, the same way that we have been for the past 7 months, right? So the Bitcoin analysis is, or at least for me, it is we're at range highs. We saw this little peak breakout above the range highs that should have kind of skewed or sparked this further expansion away from the range. And if we spark an expansion away from the range, we have potentially a move up into our 4 hour 200 moving averages. If we're going to analyze the trend as of the past 2.5 months, right? Because we said the past 7 months we've been downtrending, but the more local relevant trend, although still high time frame, is we're downtrending as of the past 2.5 months. So we could pop all the way up to these 4 hour 200s, right? And still technically be downtrending when we go and look at our daily time frame. Right? That is absolutely a downtrend. It takes you 4 seconds to realize that, and that's I discussed that idea in a previous video. Right, so we can all collectively agree, hey, that's still a downtrend. We can pop 20%. My question to you is, do you want to sit idly as we pop 20%, and you're just sitting on your hands and still saying, hey, that's not the bottom. That can't possibly be the bottom. We're just going to, bleed down and fade this rally just like each and every other rally prior to it. And that is a coping mentality. You're still technically right? Because we just said you can pop 20% and still be bearish, but you're absolutely coping. I want to participate in that 20% move just as much as I'm sure you do. So we need to find ways to give ourselves a more actionable analysis. And then we do that by assessing these lower time frames and just kind of drawing a range, right? And this goes back into our paradox of emotional attribution, where we're kind of just saying, well, people aren't really just fearful. People aren't really just euphoric because the context of the situation is, right, we're up 21% off the lows. So everyone who bought the bottom is absolutely euphoric. Everyone is experiencing those emotions individually. And then we're kind of portraying that idea on this chart for us, right? So basically, if we expand upwards, then the people who are euphoric here are only going to be more euphoric, or at least we would anticipate it to be such, right? And if we go on to lose this intraday trend, or I'm sorry, not intraday, intra range trend, right? So within the range, we are trending along these 15-minute 200 moving averages. They've been pretty damn solid. Right? We want to pay attention to these 15-minute 200s. They're pretty much the only thing that I personally have as of right now on low time frames for Bitcoin. So if we lose these 15-minute 200s, if we break down below them and we break market structure, etc., we're now simply just continuing the range style trend of which perfectly resembles or very much resembles. Did I delete it? No, it's just on a higher time frame. Very much resembles our paradox of emotional attribution, the way that we interpret emotions as humans. So the main takeaway should be don't care too much about are you going to catch this move? Are we going to go up? Are we going to go down? You should be putting more of an emphasis on how do I limit the skews or the amplitude of each and every single one of my emotional biases so that you can have a more objective kind of take on things and be that flat line, right? That doesn't really have too much of a variance or a drastic amplitude. So, hopefully, this is starting to make sense. If we continue ranging, what did you really expect? We're in a range. This range looks pretty much exactly similar to the range prior to it. So, if we continue ranging, what did you really expect? If we break out above the range and then expand, don't cope, right? Put yourself in a position to where if we do that as well, you're still potentially able to take advantage of that opportunity and hopefully succeed, right? Furthermore, if we go on to break out above the range and then reclaim this daily trend, again, don't cope, right? You need to be able to take advantage of those opportunities as they come. And if we continue doing the exact same thing we've been doing for the past 2.5 months, which is it doesn't matter what the fuck the range is, it doesn't matter what the fuck the lower time frame analysis is, and we just kind of continue range, and break down and create new lows. What did you really expect? It's been the trend for the past 2.5 months, and further than that, it's been the highest time frame trend for the past 7 or 8 months. So, what did you really expect? So, regardless of the situation, regardless of what happens here, your boy Mercury is still going to come in and say, "What did you really expect? Told you so." And then I'm going to claim clout, and then I'm going to beg you to retweet all my tweets and give me a bunch of likes, and hopefully shout me out on Fridays and all that good stuff. So, hopefully, you guys enjoyed the video. If you did, like, comment, subscribe. I know this is kind of a weird one because it was more difficult for me to get my ideas across because it's a bit more of a complex concept, and I don't really have anything to back it up. It's purely just my take on things. So basically, it's just useless bullshit that I just spewed at you for the past 20 minutes or so. But thank you guys. As always, use my Bybit referral link to ape with me. Donate to me so I can afford avocado toast and whatever. Share this with your grandma. Hope you enjoyed. Take it easy. Much love.